My portfolio saw more changes in July than ever before. It was a domino effect, and we'll cover every move in this video. In addition to all that, what's going on with this market? Don't worry, we're gonna be fine, I think. For real though, this is why we build a system that works for us and we stay the course in both good and bad markets. Our portfolio will thank us for this down the road. Today we'll get into my portfolio's value by holding, all the new transactions in July, the dividends received, and oh boy, it was a big one. A HODL factory update, which is my individual stocks. We are crushing the market again. And any future strategy changes that I'm considering. If you're new to the channel, welcome. My name's Jeff Teeples, and here we aim to grow your wealth with simple, time-tested solutions. Please scissor kick that like button, subscribe if you haven't already, and drop me a comment down below with anything that comes to mind, or if you have any ideas for the format of these monthly update videos. Let's grow. July Insights. I've received a lot of questions asking what we need to do during this extreme market downturn. And my answer to that one is nothing. We shouldn't do anything about it. Emotional portfolio moves are what make us underperform every single asset class. Seriously, we are bad at timing the market. Like, really, really bad. Check this out. This is part of a JP Morgan asset management packet. You can see down here, it's page 16. There's a whole bunch of stats and data in this report. I've zoomed in on this graph and I hope you can see it. It's pretty small on the PDF. What this chart focuses on is the 20-year annualized returns by asset class. And it's a little outdated, but the point remains. It's from 2002 to 21. So the S&P 500 on the more recent one has passed REITs, but the bottom line is we're trying to show how bad we are as market timers. And you can see the average investor is down at a 3.6% annualized return compared to 11.2 if you just had REITs, 10 flat if you were in emerging markets only. The S&P 500 was 9.5 per year, just below its 100-year average. Small caps 9.4, high yield stocks at 8.2, a 60-40 or a 40-60, that's just stock versus bond allocation, 7.4 or 6.4 respectively. Developed markets 6.8%, even bonds and just your home 4.3 and 4.2 respectively. Usually we try to mix in a variety of assets. REITs are common, index funds are common. People go small cap and sometimes they throw in bonds. And somehow, because of our emotions, the average investor loses to every single asset class, regardless of which one has the better 20 years. And this chart, they've been publishing these for a while now. It never changes. The investor is always way down here, barely beating inflation, which is 2.2 as of this 20-year stretch. But it's just wild. If you buy some of these quality assets and just stay the course to your target allocations, you will destroy the results of you trying to bounce around and jump on the hot trend. You end up buying high and selling low. One of my favorite quotes that Jack Bogle, the OG of index investing, used to say went something like this: "Don't do something, just stand there." The irony is that he was stone-faced serious. This wasn't something for a cheap laugh and then to have a bunch of portfolio moves follow. We build our portfolio around our own risk tolerance and goals. It is more important than ever to stay the course when the market is falling. Let other people around you panic sell. Those are the same exact shares that you'll be acquiring when you continue to dollar cost average into your target allocations. It has a funny way of working out because your most beat up position, let's say VGT lately, is the same that others are giving away at a discount. The timing of the automatic dip buying will naturally work out for you because other investors aren't sticking to a pre-built system to make good decisions in difficult times. Stay the course. You'll be glad. Now it's time to get into the meat and potatoes of this thing. Portfolio overview. We'll save some time this month and dive right into my accounts and my tracking spreadsheet. The portfolio tracking spreadsheet is out there for the channel members as well. I update my version every Friday, and of course you can do a save as and make it your own. We'll start out here in E-Trade, where I hold all of my former 401ks from my 3 companies I worked at, along with a taxable account that the wife and I have been building up for years. And just for context, of this 951, it's about half and half between the taxable account and the traditional IRA. I'm not going to go into the individual accounts just because it's annoying to have to hide account numbers and everything, but that's just the high level scoop. I've been really working on building my SCHD position for a long time. I'm up to 4,395 shares. The average cost is $72.70 and the total value is $355,000. It's the largest single position. And then I still have those 500 shares of VGT. Average cost is $246 and it's worth $267,000. And then this 1900 down here is a premium savings account. It's only 4.5% interest, but it makes it easy for my dollar cost averaging in, so I don't have to sell my money market as often and wait that extra day for lag. So you add these together, and in the spreadsheet, Seeking Alpha will merge those together properly. A big change from last month is that after saying I was going to sell JEPQ in favor of QQQM, which I do think is a better long-term investment, that hasn't changed, but we need that cash flow of JEPQ to pay the bills and to get by right now in life with our situation. So I upped our game, and we'll get into the specific transactions later, but we now have 2,000 shares of JEPQ at $49.40 per share, and that's worth $102,000. IBIT got a big chunk. It's up to 1,028 shares, and we'll take a look at the details there later. The average cost is $36 per share, and it's worth 36.6K. And then at these 2 bottom positions and 4 of the 436 QQQM belong to my nephew for a custodial Roth IRA. And Seeking Alpha, which we're about to jump over to, will properly cut those out. Before we jump over to Seeking Alpha, however, we are diving into the HODL factory. Now, these are my individual stock holdings, and you can see that the portfolio is only at $13,600. I'll be providing a quarterly deep dive on the HODL factory and all the individual positions, but I like to just show the overall performance, a quick snapshot here in these monthly updates as well. So we'll just pan from year to date up here. Our year to date performance for the HODL factory is obliterating the market. We're at 22.6% gains compared to the market's 9.87%. So it's been a heck of a year so far. Even though it's been a rough last week or so, the market was outperforming us most days, but we're still winning when we zoom out. And when we go out a full year, we're up 40.25% to the market's 21%. So we're almost doubling it up there. And then and this thing started on 4/20/2023. The total performance is 59.4% to the market's 34.7. And I hold 1% of the market, 99 of the HODL, just to get the percentages in there. So I've purchased them evenly over time. This is a true money weighted average to show how the decisions have panned out. And I would say 59% is higher than 35%. Now, I'm not a math professor or anything, but I think that logic pans out. We're out here on Seeking Alpha, where I aggregate all of our portfolios into one big one, and you can see that big one is a little less big than it was last month. We're at $1,375,000. And you also may know, if you're a veteran here, that this is looking kind of weird. What happened? So we used to have a crypto section, an online crypto exchange with Bitcoin and Dogecoin that I purchased in 2021. I had a promotion from E-Trade. If I moved over at least $25,000, I'd get a free $250. And I figured, well, I've been slowly doing it. So I'd sell a little crypto and then I would buy, well, drop this down here. I would sell crypto and then I would buy IBIT. So, it was a wash. It was the same thing. IBIT directly follows Bitcoin. But what I would do is I was just doing it incrementally, and I thought, well, might as well get the incentive. So I sold all of my Bitcoin at around 65K, and then I bought it, probably a little lucky. It dropped about 1,500 because I couldn't buy it till the next day, and I put it into IBIT and JEPQ. And we'll get into the details of that in the transaction section, but that's why it's officially be gone. And RIP to my Dogecoin. You guys know I was a long time follower, kind of for a fun little project, nothing serious. Only had about $1,000 in there, but it went bye-bye. So now this is everything here, and here's E-Trade without my nephew's stuff. So you'll see the same shares, and the numbers should be the same because I'm recording this on the weekend. Normally they're different, but they actually should be good now. So I won't go over every position, but here are the shares, and here's the average cost, and then here's the value over here. So real quickly, 355 with SCHD, 267 with VGT. The money market combines the cash from E-Trade and the money market from E-Trade. So I have that all in one line here at 107,600. And then the JEPQ with a lot of new shares is up at 102,000. QQQM, my shares only, is just under 80K. And then IBIT's way up to 36K. And we'll see how that all balances out when we get to the spreadsheet. Another major change I made, and it's made it so much better. So my wife's 401k is actually a closed-ended fund for the S&P 500 through Boeing. And this one's actually VIGIX, the mutual fund for VUG, the ETF version of the same thing for Vanguard. What I was able to do is sync the numbers up. I have to wait till the market closes and do some voodoo magic. But this way, when I track VU and VUG with the exact same values as hers, it updates real time with the market. So I don't have to wait till 9 p.m. to do these updates. I made that change yesterday, and it's very nice to be able to track things real time. But to the point, after all that blab, we have about 373,000 of the S&P 500, and we have 29,000 of VUG for another growth ETF there. And we'll see this all together. HODL factor I won't expand, but these are my individual companies, and they're worth 13.6K. And then checking it in others is just our boring checking accounts and nothing you'd care about. We have about 10.4K for paying bills and real-time things for life. All right, it's time to break this thing down to target allocations, and here is the spreadsheet that I populate directly from Seeking Alpha. It takes about 3 minutes a week. This is out there for the members, and a lot of people I know follow alongside, so it makes it a lot of fun. So you can see all the things were punched into here. Here's the position, what I consider the type of investment, and we'll get more into that in a minute, and then where it came from. So here's that same 1.375 million. And we can see on this allocations tab, right now, we are 27% in VU, 26% in SCHD, and then I have a variety of growth, so we'll have to refer to growth over here, but individual position wise, 19% VGT, the cash counting, the emergency checking, everything merged together, money market is at 8.6% right now. JEPQ is up to 7.4%, and QQQM another growth, VUG same. IBIT, what used to be a variety of crypto, actual Bitcoin, IBIT, and Doge, is now strictly IBIT, and it's 2.6%. And my stocks, the HODL factor, they're sneaking their way up. They're at 1%. They've been like 0.4, 0.5. So I love to see it. That's my YouTube money. What I really care about for purchasing decisions is right here. So I like to keep these three as close together as possible. And this is growth ETFs, which is VGT plus QQQM plus VUG, S&P, which is VU, it's actually the Boeing closed-end fund, and value, which is SCHD. So we're doing pretty good because these crashed so much the last few days. It actually brought me closer together. But if I were to dollar cost average in tomorrow, it would go to SCHD. So I do whatever is less to buy the dip naturally. Cash is at 8.6. Traditionally, I like that at 10, but because I'm increasing my JEPQ, I'm thinking about getting this around 5%, but we'll see. Cash flow JEPQ is at 7.4. And then crypto I would like between 2 and 3%. I'm still averaging into IBIT. And once I've had it for over 52 weeks, so it's a long-term holding, if this gets over 3%, I'll sell and take some gains and trickle it into my main mix, which is these guys. If it gets under 2%, I'll put new dollars into it. So I will let it stay between 2 and 3% long-term. That's sort of the profit-taking strategy with Bitcoin. And then the stocks, I don't have a set percent because all YouTube money goes into this, and we'll get into that in the next section. But before we do that, we're out here on the value pivot table, and this just shows it includes contributions and all market gains, dividends, all things considered. It's just a dollar amount. In 2022, the blue, we were down here. 23, we started to get better. And 24 has been great, even with the crash. We're averaging in at, well, this is the only update, 1.375. That's our only update for August. So technically in this video, we're focusing on July here. And our average update was 1.423 million, which was an all-time high over the 1.392 from the month before. So we're trending in the right direction. Oh, and the last thing I should do is on the snapshots here, you could see it was a brutal week the first week in August, which was Friday, yesterday when I updated this. We lost 41,000 that week. In the last 3 weeks, you guys can't quite see the sum down here, it's $60,500 that we've lost. So it's been a sea of red, but we're staying the course and we're swooping up extra shares, sticking to those target allocations. Now we'll get into the dollar movements of my busiest month in many years. Portfolio contributions. I'm sure you noticed a lot of changes in my portfolio compared to last month. Let's break them down into their specific transactions. All right, this is the busiest month I think I've ever had in my portfolio. So I alluded to some of this stuff as I was reviewing the portfolio itself. So we'll start with the HODL factory, my individual stocks, and you can ignore the shares, but I was able to put in $1,050 throughout the month of July, and that went directly to my individual stocks here. And again, you can ignore the average cost in the shares on that one. Now for IBIT, I bought 719 shares for $26,000 at an average cost of $36.23. And again, this was not new money. A huge chunk of this was selling the actual Bitcoin, selling the Dogecoin, moving it to E-Trade for the incentive, and then putting it into IBIT and, I should say, into JFT&x, which we added 368 shares of at just over $20,000 total cost. Pretty high average cost there at $54.58. That's gone down, but I'm okay with that because it's my cash flower, so I'm not too worried about the value there. And then SCHD was purchased with some of that getting out of the crypto, and all of the dividends received, which we'll get into in the next section, fed back. A lot of them fed back into SCHD. So a total of 6,100 was put in, and that was an average cost of what now looks pretty good at $77.32. So just to be clear, the only new money added from YouTube directly was $1,050. And then my wife's 401k and HSA, which I never put on here. So all of this was just moving stuff around. I wish I made $53K a month, but I'm not quite there yet, as you can see. It's time for my favorite part of the video. Show me the money, baby. Dividends received. July was by far and away the biggest dividend month in my portfolio's history. Let me show you what I'm talking about. If you were with me last month for the dividends, it was a fairly disappointing $1,427 compared to the year before's $26.95. But SCHD fell in June in 23, and the SCHD dividend fell in July. It was a little late in 2024. I promised you guys a comeback story, and well, did I lie? Did I lie? $6,383. That beat the all-time high. I was going to say crushed it, but I do see in December we almost had 6,200. I guess I'd be exaggerating a little if I were to say obliterated it, because you know I love using that word, but still an all-time single month high. Let's see how July shook out. So FXAIX, and this actually is outdated. This is, I think I'm going to change it to VU. Basically, this is that close-ended Boeing one. I have to use something to get the dividends out. So it was 1,188 last year compared to 1,243, so a little more this year. JFT&x is new compared to last year at a juicy 687. The M1 mix pumped out its biggest dividend ever, and this will become a fun thing to track because I plan to do giveaways to give back to the channel members with the all future dividends from M1. Last year was at $2.80, and this year is at $19.77. That's pretty impressive. And in the quarterly videos, we're going to take a look at the details of the dividends when it comes time to start my new giveaway I would like to do for the channel members. Savings, that's just that premium savings from E-Trade I just started using for easier transfers, $1.51. SCHD, baby. 0 last year, so it's a little unfair because it fell here in June. You can see last year, $25.97 versus this year of $35.56. The biggest dividend per share the SCHD ever paid by far and away was last quarter. And then VGT actually went down a little, but that's because I turned some of it into QQQM last month, if you remember. Mixed it up a little bit there. And then VYM. Last year I had some T-bills and stuff, so this isn't quite fair, but 191 to 492. You add it all together and that is over $6,000 of dividends. And for the year, we're already at 18,168. So we're pretty close to last year, 21,640. But if we just look at the dates that have actually happened so far, so let me go ahead and take these ones off. Year to date, we're at 18,168 compared to 8,900. Again, this isn't quite fair because I've used money market here, whereas I had a ladder of treasuries here. So a lot of the interest was actually technically recognized in 2022. But you know what? Who's counting? We're winning, baby. This is cool and everything, but is this thing working? Portfolio performance. I'm excited because I found a way to break down the performance by month of my portfolio versus the market. And we'll still take the high level view as well. Let's dive in. All right, we're out here on Portfolio Visualizer, and I'm going to show you the setup that we're running here. We have my mix, which we have our third of SCHD, third of VU, and a third between VGT and QQQ. And then for VU, of course, we have 100% VU, and that's the market. And then we also add VT, and that's the world market, basically VTI plus VXUS to 100 to see how 40% or so international mixed into VTI compares to our mix. And then we'll check in on the settings here. We're looking from 2012 through 2024. Year to date is on, and this is about my investing journey. And speaking of which, we're saying we started at $83,500 with $2,000 of contributions per month. And this is just to get as close as we can because I actually started investing in VU in 2010 and I probably had about this much, contributed about that much, monthly contributions, reinvest dividends, of course, and display income at the end, yes. So let's check her out. We're gonna start here at the performance summary, and don't worry, we'll get into the monthly data as well as promised. But just the high level view, starting with $83,500 and putting in the $2,000 per month, you end with $1,376,000 with my mix, and that's why I tried to get the amounts to get about here to see how it compared to VU, which would end with $1,193,000, and VT, $848,000. So I've definitely outperformed what I consider to be the most two important indices, because the way I determine that is this is what I would invest in if I didn't do my method. A lot of times I'll show this on the portfolio growth. They tend to trend together because the market really does go up and down in unison. International can be a little bit different, the bottom bar here, VT, but you can see the S&P 500 and my mix, they'll go up and down together. I just win around the margins because I feel I have a little better value within my value and a little better growth within my growth compared to VU, the market. And looking at annual returns, it shows what I just said. We did lose to the market in 2012, but every year since then, we have outperformed both VT and VU in each and every year since 2013. Barely won that one. Ooh, barely won that one. We're 11 years and running, but number 12 is eluding us right now. We're still down year to date, 10.44% to 12.92% of the market. We have some work to do. And quickly looking at the trailing returns here, you can see that my mix in the last year has lost to VU. In the last 3 years of annualized returns, it's basically tied. We're just ahead and we're just under 10%. In the last 5 years, we're comfortably ahead, 17% to 15%. Same story with the last 10 years, we're a couple percent ahead, and that 2% compounding makes a big difference. And the full timeline, we're up by just over 1.5%. And then I didn't mention VT, but it's trailing significantly in each and every timeline here. Although in the full 12 and a half years, it's at 10.5%, so not too shabby in its own right. Portfolio income, I'm always a big fan of the dividend growth over the yield, as you may know, and you can see how that's playing out so far. You get some good cash flow going. The only thing I'll emphasize here so we can move on is that the PE ratio is very important. And my mix, and that's what we're looking at here with these holdings, is 26.21 PE And my high sector is technology at 39%, almost 40, whereas VU is 26.5. So we're actually a slightly better value than VU, if you want to look at PE as value. It's one of the main metrics for that. And it's also tech heavy at 33%. And then VT's PE is at 20.6, so maybe the world has a run in it yet, and those small and mid caps as well, compared to VU. Now this is the cool one I found that the new portfolio visualizer provides for us. It has monthly returns, so I'm not gonna go through every month, historically, but looking here at July, so we do have one little tick in, we're gonna ignore this one. For the month of July, which this video is about, my mix returned 1.71%, which had outperformed the market, which was 1.16%, and fell short of VT, which was the champion, the world market, at nearly 2% in July. So it takes the crown. And if you want to look what carried my mix, SCHD was up 6.2% in July alone. And that compares to the 1.16, as we saw over here, VU, the market, and 1.98 here on VT, but you can see my technology stocks, VGT was down 1.49 and QQQ was down 1.68. That's where it's nice to have that fine balance between growth and value, because when the growth is down, it's pretty common for these value stocks. SCHD has an extremely low PE ratio. They're full of value. To be up quite a bit is a nice counterbalance. I got off to a slow start this year, but I'm slowly reeling the S&P 500 back in. My mix is looking for its 12th consecutive winning year against the S&P 500. Looking ahead, I'm glad that the E-Trade promotion opportunity gave me the kick in the butt that I needed to get away from my online crypto broker. I had been slowly siphoning money from my online crypto broker into IBIT, as you know if you've been following the channel, month by month, but I decided just to rip the band-aid off. We're also considering adding even more to our JEPQ position just for that increased cash flow. My wife and I care a lot more about the cash flow than we do about our portfolio value at any given point in time. We know that when the federal fund rates drop, when and if they do, and they probably will soon, a couple this year maybe, that money markets and high yield savings accounts will give less cash back, of course. And as the volatility of the markets increases in this crazy market we're in, that's actually good for the cash flow of JEPQ. Now, it isn't set in stone yet, but I'm considering reducing my cash position to 5% in favor of more what will mostly become JEPQ. Life with kids and a mortgage is expensive. And we view JEPQ as a quality employee that helps pay the bills each month. Check out one of these two videos if you like what you've been seeing on the channel. I really do appreciate you sticking this out until the very end. You have this portfolio thing on lockdown. Thanks for watching, and I will see you here next Sunday. Peace.